Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 19th of March, 2022, and it's the weekly technical analysis for spot gold and dollar yen for the fourth week of March. Let's begin with spot gold. And it did weaken at the start of the week with two bearish days falling into this previous swing low area, and with the 38 pip retracement, that's where the support zone was, but it did punch through the next day on Wednesday with the hawkish Federal Reserve making a rate hike and announcing a further 6 rate hikes for the year, trying to reach 2% interest rate target. So then it managed to recover and climb back up into the supposed to be a support, but now resistance area, and that's at the round figure of 1950. So it did drop to a low below the 1900 at 1895 before managing to bounce back up. But then after that, on the Friday, it pulled back lower again, right back into the support zone here. Let's add the 1900, sorry, 1900 level here. That's it's a key round figure, and let's make it a bold line here. All right. So it did not try to test the resistance at all and just fell from just below 2000, well, almost 900 pips there, right, all the way down to the 21 fib. Let's see if we can move this fib and I think we can change this fib now. Let's clear this and probably use this fib to find the retracement. That's the start of the swing move up, right up to the high, and it has fallen back down, almost hitting the 62 fib retracement at the 38. It shows 38, but that's the 62 fib retracement, 1891. So yes, that was 1895 low. And let's check this previous. It was a previous swing high up here. That formed the support. Let's move this down to here now, right at the 62 fib retracement. Maybe make it easier and just change this so that you can see that it's a retracement. And that's going to be the support zone, along with the daily 55 coming up. And this is 1950 is going to be intermediate resistance. And further up here, that's a major resistance. For now, we'll leave it out for now. And I think we'll clear these channels. And let's see, this was a triangle that it broke up from. See if I can change this color. There's too many conflicting colors here. Okay, and this swing high up here is a potential support level as well, which it provided. Support there for this wick. Exactly there. And I think we can remove this level now. Okay. So we'll see if there's going to be consolidation in this resistance zone with the 38 fib to the 62 fib retracement. It could be boxed in here. It could also, because this was last week, it could also continue lower. It needs to break below this support zone and this swing high and target this 00 at the 1850. And let's take a look on the weekly time frame. Yeah, this very long upper wick here is continued the bearish sentiment the last week and driving down lower here. So if there's still a bit more bearish momentum, that could drive it down even lower. So let's see if that's possible for next week. So it needs to clear this support areas. And if it dips lower, it could come back to retest this zone where the 1850 along with the 786 fib retracement and along with the upper trend line of this channel, of this triangle, sorry. Let's change this to, okay, let's go back to the daily time frame. So if it does break down lower, this is a very key support level then. With a confluence of three levels, the 786 fib retracement, the 1850 round figure, and this previous upper trend line of a triangle. So it does break down lower. That's going to be the major support zone. All right, this coming week, there's not many significant news. There's only the durable goods and flash PMIs. So let's take a look at the, let's also take a quick look on the 4-hour time frame to see the reaction from the Federal Reserve rate hike. And initially there was a move down as the US dollar strengthened, but then after it weakened, it turned around and bounced back up and hit the resistance of the 1950 round figure with the confluence of the 4-hour 55 as well, and then pull back lower. All right, let's take a look at the US dollar index as well, the DXY. Here's the DXY US dollar index, and after hovering at the 99 level from the start of the week, and Wednesday was the big drop, start of the drop after the FOMC announcement that they would increase rates by 0.25%, and with an additional 6 rate hikes for the year, for the rest of the year, to reach a 2% interest rate target. So it seems that they have already priced in that move from all these move up earlier from this breakout from this high, and then it has settled back to retest this zone here and settling around at the 98 level. So let's take a look on the 4-hour time frame to see the move, even down to the 1 hour if we could. Yes, okay, so right at the start of the news, this should be the start of the news here at the release of the statement at 2 p.m. US Eastern time. So initially it did climb up higher as it was positive for the US dollar, but after hitting these resistance levels, it was promptly rejected and continued lower into the 138 FIB extension here, and then continued lower the next day on Thursday before climbing back up slightly on Friday. So this was a case of buying the rumor and selling the news, and it's has already crept back down. Let's take a look at a weekly time frame, and this level here came all the way from this wick from June of 2020. It was a swing high area, and it dipped down to find that support. In fact, the previous week it was also the swing low area. Okay, so we could now also move this fib to check the retracement. And it came back to the 38 FIB retracement level, which is where that previous swing high was, and the support zone. So this is still a support level. We can move this resistance zone down lower here to this swing high. And that's the high at 99.44. So it could be settling into a consolidation range between 98 and 99. And see how long that zone will hold. The next target on this longer term FIB extension is at the 138, which is right close to the 100 zero figure. So we'll leave that for now. All right, there's no major news this coming week, so we'll see. It all depends on how the conflict in Ukraine shapes up and whether there's any hope for peace treaty. But meanwhile, there's some consolidation already forming here. Let's also identify another support zone at the 50 FIB retracement. It could also dip down to that level because there's a turning point here with the evening doji star here, right at the 50 FIB. So we could also identify this area. Okay. All right, so let's move back to the other pairs. Let's move on to the dollar yen, where you can see a very strong bullish trend up since the break of this horizontal resistance, and it was a ascending triangle for quite a while. And since it broke out the end of the previous week, it has been on a bullish tear and finally hitting the 200 FIB extension. That's double of this move here. So there's a reversal extension here. And it went right through the resistance zone. So for now, let's mark this as resistance, as key resistance here at 119.20. 23 area, and let's also change this 138 FIB to a support. Let's just clear this. Let's clear this as well. Now, if we go back, and we can see that there is a resistance zone that it broke through. That was the previous swing low and resistance, and all the way through it has closed well past that, and that was around the 162 FIB, so it closed at the 200 FIB extension, and looks like it's trying to target the next round figure. The 262 is at 121. It needs to break through 120 first. 120 is going to be a key round figure, but there is a swing high area let's see, it's yeah, it's well past 121.69 here. Let's go back to the weekly, and I think we'll remove this zone for now. Let's remove this for now. It's at the 120 round figure. There's going to be a significant round figure here. And let's move some of these lower round figures now. Let's move this to the 119. And as well as the 118. Okay. Back to the daily time frame. So I've marked the 138 fib at 117.40 area support, and for now, key resistance at the 200 fib, just above the 119.23. We'll see if it's able to target the 120 round figure. Let's move another resistance zone up here. But the 262 is well above that. Now, I can move this to a continuation move, and that shows the 162 here at 118.70, and the 200 fib is just above the 120, so this could be a better target zone. 120 to 120.14. Let's bring this down here to 162 as a support. Let's move this one here up to the 138, just below the 118. So that's the support zone. Okay, so we'll use this new fib continuation move. And take a quick look on the weekly time frame, and that's definitely 2 bullish weeks there, and it's possible to extend the bullish momentum right into the 200 fib. So that is indeed possible. We can also check on this weekly time frame. Let's check this continuation move. And that has already hit the 162 here. Right, so that's a possible support zone. There's a confluence of these two fibs here. Okay, so clear this one out. So US dollar has been strengthening against the Japanese yen, which has been selling off, and along with the safe haven spot gold as well, that has already sold off. but against the US dollar, it has weakened. And on top of that, on Friday, the Bank of Japan also made some dovish statements. So that's why the US dollar has strengthened on Friday as well to push it through the 119. Okay, so let's see next week if it's going to target the 200 pip or more, and then settle down. If it does dip, there is should be strong support here at the 118, and attempt to break out higher as well. Okay, so short-term bullish for now. So meanwhile, do check out my other video on the major pairs. Have a safe week and a good trading week, and cheers for now.